Hello, everyone. I'm recording this on the 14th of December, just before the market opens, and should be up on YouTube by the end of the day for you to watch. So the main reason behind this video is just as we're going through a bit of an ugly drawdown. I think the second worst really since I've been trading full time over the last 3 years or so. I just wanted to, touch base with all of you and explain what's happening, how am I managing the downside, what are my thoughts and plans in order to contain it, and what do I think has caused it, etc., etc. So the first thing that I really noticed and that I just wanted to touch upon is how, even though I've been having a bit of a drawdown, the number of copiers really hasn't changed that much. It's been pretty stable. So this is really great to see. And I don't know exactly what it's caused by, but as I've said many, many times before, it really doesn't make sense to leave during a drawdown unless you think that it's not just a drawdown, right? Unless you think that it's going to keep going down. Fundamentally, as long as you believe that it's a sound investment, then a drawdown is just part of the volatility, which comes as a natural part of what you have to go through in order to achieve returns. And that kind of ties into really one of the main things that I wanted to talk about here as well, which is crypto, which has been the main culprit here of our drawdown. So the portfolio is currently comprised of around 20 to 25% crypto. So we have Binance Coin, Bitcoin, ETH, and Solana. So they've all been having a pretty rough time, and that has really been the main cause of the drawdown. So let's just start by taking a look at crypto here. So on the largest, sort of zooming out far, I would bring the same analogy as what I was just mentioning in terms of the copiers. I think with something like Bitcoin, if you fundamentally believe in its future, which I think at this point is, of course, not a guarantee, but I have very, very strong conviction in it, then leaving during a drawdown makes little sense unless you think, again, that it's more than a drawdown. So there can be some exceptions to that, like here, where the drawdown was just so massive and so violent that it looked like a bear market might have been starting, so it could make sense to leave. But fundamentally, if you're looking at a really long-term view, then you just want to hold on to it. So I think that applies here in general, but also more specifically, if we take a look at Bitcoin here, you can see how the reason why it fell very dramatically here back in May was that we had really been on a serious move since we broke out around 10K. It'd gone all the way to 60 with some pretty minor corrections, right? So it was pretty over leveraged. There was a lot of leveraged futures participation in this market. It was really overbought. And so then when it started to correct, it really just didn't find any support and went down hard. Things are pretty different here because you can see we've been making our way down slowly and there's been no real, a little bit of a shock here, but nothing like this. And to me, this really looks quite healthy, like a pretty normal Bitcoin correction that is currently being supported by the 200-day moving average, and there is actually retesting this this trend line, which you could consider to be the trend line that defined this breakout here. So all in all, even though it's painful when it's a significant part of your allocation, I'm not overly concerned at this point. I added a little bit but I'm not going to add significantly. I'm just going to aim to maintain that kind of 20 to 25% allocation, because we can't ignore the fact that it could go down further. So we don't want to be too exposed. But in general, as I said, I remain very bullish crypto with a long-term view. I think it's one of the best investments still that you could possibly make. And so I think it makes sense to hold it if we have a long-term view. And I'm certainly willing to accept an amount of drawdown, obviously not anything too significant, and we're kind of reaching my comfort limit. But that's why I've sized the allocation as I have, to kind of allow for these sort of drawdowns. Binance Coin is really a little more difficult to analyze, but as I've said many times, it's less of a crypto and more of a kind of Binance stock almost. So that continues to be a great business, very profitable, and I see no reason why we shouldn't continue to be bullish on this. And then ETH is actually probably, it looks similar to Bitcoin, but I actually think it's going to end up probably outperforming it in the medium to long term. You can see if you look at a actually bigger chart of ETH BTC, this looks very bullish. It looks like ETH is probably going to go much higher here. And yeah, it's similar picture to Bitcoin, really. You can see how there was a breakout from this trend line and we're just coming to retest it. It really looks like accumulation, similar to this pattern here, even though this was more dramatic. You can see how this level of demand is just tapped again and again until, all the big players have filled their bag, so to speak, and then it's ready to move up. So that still seems to be the main picture to me, and I think it's unreasonable to panic. If you look at the fear and greed index, cryptos is currently around a 13 or something like that, I think, out of 100, which is incredibly fearful considering that we're actually not that far from the all-time highs. I think people forget that Ethereum was as low as $80 to $100 just a year or a year and a half ago, and we're now at 4,000. So we need to maintain a sensible perspective in terms of time horizon here when we're looking at this kind of thing. So if it comes much lower, especially below the 200-day, maybe we can start trimming down just to, contain that drawdown. But ultimately, I think it really makes sense to have crypto in our portfolio. The next thing that we should probably discuss is, and hopefully this starts to make more sense to some of you now who had been asking this question, is the reason behind the high cash allocation. So not only are there very little in terms of interesting or appealing looking investments right now, and therefore, if the best investment you can find has a negative expectation, then you would rather go with cash, which has an expectation of 0, ignoring inflation, everything, just to keep things simple. So not only is there not much out there, but given our allocation, so quite heavy on crypto, relatively speaking, it's important that we have things to balance that out. So if we had a higher crypto allocation, or even if we had been invested in more stocks, the drawdown would be more severe right now, and that would go beyond what is acceptable to me. So this isn't, hopefully that makes sense as a strategic part of the portfolio allocation, and not just as a lack of willingness to invest, or however else you may interpret it. So if we then, on that note, look at stocks, you can see this picture that I've been discussing recently, which is really, I think this is the one picture that sort of sums up what's happening in the market right now. So the vast majority of stocks are below their 200-day moving average and trending down hard. So we can look at some casualties here, for example. I mentioned these in the previous video as well, but it's looking worse and worse. Look at some of the stocks that did really well last year, like DocuSign. It's suddenly gapped down huge, 40% gap down. And you keep seeing this pattern, right, of the stage 2 strong uptrend, stage 3 when it's just kind of topping and moving sideways, and then stage 4 when it just collapses into the void. Same with great stocks like Logitech, even Moderna to an extent, but I guess that's less relevant. It's mostly the stocks that were performing the best, right? Peloton is down. How much is that? Just huge. And it's just been happening sort of behind the scenes, right? With these handful of stocks really propping up the indices. So the indices are, I don't think I've ever seen anything like it. The indices are such an unfair representation of what is actually happening in the markets. They're really kind of disguising it. PayPal, Tesla starting to look weak. This was looking like potentially a constructive consolidation, but it's becoming a bit sloppy. We're breaching the lows. You can see it's going to open down in the pre-market. Square, same kind of pattern. Nvidia has been really strong, but you can see it had a pretty big red down day, closed at the absolute lows, pretty high volume, very ugly signs. Same with other leading stocks like Cloudflare. And what concerns me is that some of the stocks, the strong stocks that have been holding the market up, are actually starting to look like they might be following suit soon. So Amazon, even though it hasn't been dropping, you can see that it had a really nice rally, and now it's just moving sideways. So if this rolls over and breaches this sort of $3,000 support, then as soon as these big stocks roll over, Apple, Amazon, and whatnot, they might not, but it's probably safe to assume that they will at some point. Then the indices could come crashing down. So with that in mind, it's quite a tricky environment to invest, because if you try and buy any stocks, there's really not much upside to be had almost anywhere. And if you try and short the indices, as we've seen, it can, it can be profitable, but it's quite choppy. So you're really just trading around, and it's very hard to get that big downside that is really what you want to see when you're trading an index. Or at least for me, that's how I see it. You want to be risking a tiny bit to potentially ride all of this big wave down, which I still think will happen at some point, because none of these trends can go on forever. But right now, it's not an easy trade. The market's definitely making it difficult. So with those two things in mind, what I've started to do, which I think is the only thing that's left really, is to short some individual names. As if you look at the market as a whole, individual names, most of them are getting slammed. So to kind of recap and explain the portfolio, we have crypto, which is struggling a bit, but we're still bullish on. And then we have some stocks, some of the stronger stocks that have been holding up to an extent, just because I really don't want to try to predict the markets, so if the markets do continue to go higher, which they could well do, I want to have some exposure to that. So we do have stocks like Google, Amazon, some longer term potential plays like Airbnb, Palantir. But then what I've started to also integrate is some individual shorts. So shorting the Russell, which has been underperforming the NASDAQ and the S&P, and is really more reflective, because it doesn't include those mega cap names. It paints a clearer picture. And then I've also shorted some names that are looking like they're really struggling individually. So PayPal, Generac Holdings, and CrowdStrike. So if you look at CrowdStrike, for example, You can see this is sort of midway. It hasn't really started to tank hard yet, but you can see the rise, the consolidation, and the fact that it crashed through its moving averages, and it really is moving down quite fast, and it's just really struggling to hold up. So I think that that's really all we can do to try and extract some value from these markets, and just continue to watch it, to be open-minded, and see what opportunities come along. So hopefully that gives you some insight into how I'm looking at the markets and what I'm thinking. There's no denying, that it's painful to have these kind of drawdowns, and that this market is very tricky. So all we can do is try and do the best with the circumstances that the market gives us, not to fight it. And you can be pretty sure that at some point in the near future, there will be some easier gains to be had, whether that be crypto turning around and having a really nice rally, or a harsher correction that we can short, or maybe a correction being over and some stocks starting to set up more constructively. So I think that's pretty much everything I wanted to cover. I like to keep these relatively brief, but please let me know if you have any questions. Just drop them in the comments. Please try and keep it constructive and friendly. And yeah, I can try and either reply individually or address your questions in a following video. Maybe we can do a live Q&A as well, or something like that. Okay, thanks for watching, and I will speak to you soon. Take care, everyone.